Welcome to the Keiser Report. I'm Max Keiser. We continue with our New Year's week celebrations in which we ask guests during the course of the year to make their predictions for 2015. To kick off this second episode of 2015, we talked to Alistair McLeod of GoldMoney.com. We started off by asking him if central bankers had won, if they were indeed masters of the universe, able to command all markets all the time with the push of their magic printing press button.
I think the answer to that is that while they may be winning in the short term, in the long term they are bound to fail. The difficult point is knowing when short term becomes long term.
But didn't Keynes say in the long run we're all dead?
Yes, he did.
Okay, so I mean, how much longer, buddy?
I would also say,
the clock is ticking. Are we going to hear New Year's Eve next year saying, well, you know, someday?
Max, von Mises said that the only true statement to come out of the neo-Cambridge modern school of economics is in the long run we're all dead, and even then it was out of context. So.
Well, speaking of von Mises, there was also Friedrich Hayek, who was a big influence on Margaret Thatcher. And one of the things he did propose, by the way, was a basic state income. And he did talk to, I think it was Keynes, about this. What is going to happen with the bottom 99.9%? Because this seems to be getting worse and worse every year. I think even for the top 0.01%, it's a dangerous situation. As 2015, what are we going to do with automation? Another report out in the end of the 2014 is that 30% of all jobs in the UK will be replaced by robots, basically, within the next 20 years. Most of them, the lowest income of the people.
So that's progress. I mean, if you look at the jobs that were around at the turn of the last century, you know, you had saddlers, you had blacksmiths, you had, I mean, all sorts of job descriptions which you have to look up in a dictionary because they no longer exist. It is called progress. I mean,
yes,
you can't be.
No,
it's called unemployment. It's called unemployment.
There's mass unemployment.
People are unemployed. Unemployment rate is skyrocketing. The people who are on minimum wage, zero wage, it's all over the world. Massive oversupply, massive unemployment, and they're getting violent. So what do we can all become soldiers and go shoot them?
In a capitalist economy, it's redeployment of resources. But the problem we have is that governments have stopped the capitalist market from redeploying its resources effectively. And that is, in essence, the problem. Well,
what Friedrich Hayek argued in his statements was that the problem that workers and laborers have is that they have less leverage than the bosses. Because if they're desperate, and there's tens of millions of unemployed people across Europe, there's tens of millions of hundreds of millions of unemployed across the world. And he argued that they don't have the negotiating power. They go in an unequal, it's an unfair competition between them.
Well, I would disagree with that fundamentally, really on two levels. Firstly, it is about redeployment of resources. And of course, nobody likes change. But we have to embrace change. It is part of society. It is what drives society. It's what drives progress. And the second thing is that Labour has organised itself, if you like, to be more powerful very often than its employers. So that the employers then turn around to government and say, look, we got a problem. Unless we get a subsidy, we're going to put people out of work. And of course, what happens is that the politicians then
No, that's completely false, because Labour doesn't have any power, because they're tying their wages to inflation, and the financial industry, which dominates the UK economy and the Western economy, ties their compensation to money supply. They can print their own money. They can print billions of dollars worth of bonuses for themselves. And Labour doesn't have the printing press. They can't print $1 billion for themselves. So either tie Labour wages to money supply or raise interest rates immediately to 5%, 6%, 7% and get rid of the financial oligarchs that are jamming up the system. Those are the two choices.
That is, those are the two choices if Labour refuses to adapt.
Why shouldn't the banks adapt? Why are we letting the banks run amok lawlessly? Why don't know?
That's a separate question. I mean,
it's the same question because they're resulting in massive unemployment and they're rising up and they're causing violence. So unless a banker wants to die rich without their head, which I propose is the suitable solution, they should just I don't get it.
Okay, let's move on to another topic. At the end of 2014, what we saw 3 years ahead of schedule was that China passed the U.S. in terms of GDP and purchasing power parity, and that's how the World Bank looks at the world for the past 1,000 years. The charts go back. And this means always throughout history, this is a new empire emerging. Now, let's talk about the end. Is 2015, how does the end of the U.S. empire look? We see new financial systems emerging, like replacement to SWIFT is supposed to be introduced by Russia this year. We see in Brazil, they're building a new infrastructure for their own internet outside of the U.S. Is this another deglobalization period like we saw As the British Empire collapsed, we also saw deglobalization and decades of war. Is this going to be similar? Are we going to see that, or is it going to be smoother? What do you think as 2015?
Well, I have little doubt that the United States as a financial and economic power is in decline. It has seen its peak and it's declining. And the new powerhouse, if you like, is going to be Asia. And I don't think we think just in terms of China, we think in terms of China plus Russia plus all the various other states there. We're talking about 4 billion people if you include the Chinese diaspora, or those countries which have a very strong element of the Chinese diaspora in Southeast Asia. 4 billion people out of 7 billion on the planet coming together into a coordinated, cohesive economic unit. And it's driven by Russia has the resources and China has the production. So this is the new model, and I think it just leaves us way behind. And there is also the subsidiary question, and that is the value, if you like, of the United States is reflected in its currency. How is that going to change as it declines? And I think it's bound to be rather bad news.
So end of American empire. I was going to say British empire.
Well,
they're kind of the same. It's a continuation.
It can take a long time.
Yeah.
I mean, the British Empire took a long time.
Yes,
too.
yes, it took bloody decades.
And that's
literally.
Despite every attempt by the politicians to destroy it.
They're coterminous.
Now I want to say a final question. Is 2015 the year we see the end of market manipulation in gold, silver, Forex, equities, housing, all that stuff? I'm just joking. Obviously, that's never going to happen.
Good joke, honey. All right, well, we got to go. Happy New Year.
Happy New Year to you both.
Next up is Mark McGowan, a.k.a. the artist taxi driver. We talked about the general election 2015 and more. Happy New Year, Mark McGowan, the artist taxi driver.
Hey, Happy New Year.
Yay!
Hey, whoopee! So, general election 2015, Mark, what will be the main issue and who will win?
Well, it's going to be for the whole election is going to be on immigration, on prejudice, on welfare. That's it.
Yeah.
That's what it's going to be for.
Can you see immigration, however, as an economic issue? Remember, it was Bill Clinton who said, "Is the economy stupid?" And of course, people are blaming immigration for the fact that real incomes have declined by 10% since the financial crisis, but prices of housing and school, university, all these things are rising in prices. So they're projecting it towards. How do you turn that around in your sort of videos that you make? Where's the answer? How to inform people what the real cause of their economic pain is?
Well, it's got nothing to do with immigration. Immigration is a tactic, it's a tool, it's scapegoating, it's global. They do it in every single country in the world. They use it to rub people, to get their prejudice, to deflect from a way. Well, they just had a poll. The majority, this is the demographic of the UKIP party. They just had a poll in this country. Should British people have freedom of movement? Yeah, of course we should, 75%. Yeah. Should foreign people have a freedom of movement? We don't want them here. Do you know what I mean? The hypocrisy, but that's not just for Britain. That's every
everywhere.
Country. That's whether you're in France, the rise or the right. That's what they use it as a tactic. They use it as a tool to gain power.
Yes, but that's what is also a problem with having just pure democracy, no rule of law, in that voters will always do that. So here you have a situation with a mega housing bubble, unprecedented. Part of it is that those who are in their homes don't want they'll only elect people who will do nothing that will ever lower house prices for everybody else to enjoy. At the other end of the spectrum, you have people who want to get on it, but then as soon as they get onto the housing ladder, they also want prices to rise 20, 30, 40% per year forever, so they never have to work and they could always be rentiers.
London Borough of Merton last week, they just evicted the last 37 tenants. They have now completely divested. They are ground zero on council homes. It is social cleansing. They have no council homes whatsoever. We got people that two guys I just see in the rain sweeping the road. Do you know what I mean? With the rain lashing down. We got people working in supermarkets, nurses. Where the hell are they going to live? Where they're going to live. We need not-for-profit housing.
Well, you speak of nurses, and there's another situation in this country where you see the fact that nurses were on strike for a 1% pay rise. But what has happened because of the coalition government is they spent £5.5 billion last year on hiring in nurses because there's a shortage of nurses. They pay them £1,300 a day. For most of it goes to the firms that have these temporary staff of nurses on. So how does this end? Where does this end? And which party, by the way, for this general election 2015, are any of the parties not in the pockets of corporations?
Well, they had one chance. You saw in Scotland, right? They had one chance and what they did, because, you know, the people, the Guardian reading liberals, they got the most to lose. They're the ones that got the mortgages. They sit there, they write their columns, and they say about this, and they want the status quo. They want the status quo. They got scared. They started panicking. Oh my God! If Scotland goes, because of all the scaremongering, because they buy into all that as well. Do you know what I mean? With your Deutsche Bank saying like, it's going to be like a, you know, this is how they win. Do you know what I mean? They scare people, and people believe it. Whether it's to do with immigration, whether it's to do with like cutting off people's thing to housing, that's abhorrent, you know. And it's to do with the banks. The banks, you know, their CDOs, all the things that happened, and they sold all the houses, the mortgages in America. They went bankrupt. You know what I mean?
Well, I'm going to tie a few of those points you just made into one question, because the Metropolitan Police have brought in RBS, Royal Bank of Scotland, to consult them on financial crime. What do you think? What do you think this is for 2015? Does that mean that, what do you think first, Max? Do you think crime will go up or down because of RBS coming in to consult on financial crimes?
I'm going to go with up on that.
What about you?
I mean, it's a joke. You know, it is an actual joke, and it is like when they get caught out, when the bankers, the police, the media, the government, when the establishment get caught out, they just close ranks. That's what they do.
Well, yes, they elevate them. They give them a lordship or a damehood, or they bring them in to consult the police. Right now, RBS was recently caught in some other scam. So as soon as a big scam threatens to turn the population into a revolution and storming the gates, they reward them with an official title, or make them, give them a presence in the media to the people, enough of the population that somehow these are good people and we shouldn't storm their palaces.
We got banquets for the rich, austerity for the poor, and prejudice for everybody else.
That's a good way to end it.
Mark McGowan, thanks for being on our New Year's special.
Hey.
New Year's happy. Gave you the dance. Yeah. New Year's happy. Yeah, there you go. Whew. Exciting. Welcome back to the Keiser 2015 special. Next up, we talked to Chris Powell about a huge story which went uncovered by the mainstream financial news, of course. We asked him about it, the CME Group, and a letter they had sent to the CFTC about the volume discounts available to central banks for their trading accounts.
The CME Group is the operator of all the major U.S. futures exchanges. And this document here is a filing by CME Group with the U.S. Commodity Futures Trading Commission. It was uncovered by Eric Hunsuter, who is the founder of the market data research firm Nanex in Winnetka, Illinois. This is a letter from the CFTC, to the CFTC from CME Group, disclosing that central banks are getting volume discounts for secretly trading all U.S. futures markets in all the contracts, not just financial contracts, but metals contracts and agricultural contracts. Now, to me, this is a sensational story that central banks are trading futures.
So are you saying that the Treasury is buying this, or is it like the Department of Justice buying bulk silver for their bombs they're dropping all over the world?
This says that central banks outside the United States are getting discounts for trading futures in the U.S. markets with CME Group. It means that central banks are trading futures across the whole spectrum of the markets. The second document here is the CME Group's 10K filing with the U.S. Securities and Exchange Commission, which is a basic business report that every company has to, every public company has to file with the SEC. And it describes the customers of the CME Group, and it includes governments and central banks as being among the CME Group's customers. Now, this means that central banks are secretly trading futures in the United States. Now, the CME Group letter says that, well, this is good because it increases liquidity in the market, but liquidity is like, you know, the ocean. You can't trade against a central bank. They create infinite money.
Well, that's a good point. Let me jump in here for a second, because in other words, they can pick the direction of a market with impunity, without any counter, without anybody opposing them in the market.
And doing this in secret. This means that if central banks are trading all major futures contracts in the United States, it means there are no markets anymore. There's just central bank interventions. Now, this is a sensational revelation. It's on the internet site of the CFTC. It's on the internet site of the Securities and Exchange Commission. I've sent this document to many financial news organizations around the world. I can't get one of them to pick up on the story.
Well, let's talk about gold and silver, because there are many viewers of the Keiser report who love gold and silver. First of all, 2014 was a horrific year for many investors in gold and silver, at least if they had to cash in their, you know, they had to cash in their gold and silver at a loss. What do you reckon is in store for 2015? I know it's hard to predict prices, and the other thing is, I noticed that like one of the biggest of the gold miners, Newmont, it's at the same price on the stock market as it was in 2000 when gold was down at $250 an ounce. Is that where gold is heading, or is this something being mispriced?
Well, I'm no guru on this stuff, Stacy. I think two things could happen. One, as in March 1968, the gold that is available to central banks for market rigging purposes simply could run out or get to the point where they don't want to spend any more of their gold. Or, as I suspect is more likely, we will face more and more of what even central bankers today call financial repression, which is intervention by central banks in the markets in order to control prices that they don't like. I think that's what the central bank futures market trading indicates, that we are going to have more financial repression, more destruction of markets, more destruction of democracy as central banks impose more and more controls on the economy to basically defend the banking system.
I mean, that's your definition of financial repression, is that central banks intervening in the market to move prices in ways that are...
Yeah, to defeat markets. In fact, I think for some years now, Max, I think the primary objective of central banking in the West has been to prevent markets from happening at all.
Right. Well, the results are on the street because people are revolting. There's riots, there's protests, there's all kinds of street demonstrations.
Living standards are declining throughout the West.
Because of this.
This whole system is a totalitarian and parasitic system that is redistributing income from the public to the banking system. And in fact, the purpose of central banking has been lately for years to reliquify banks. They run this arbitrage on interest rates. They pay you and me nothing on savings accounts, but you know the banks get to charge us 5–10%. Who is the government for? Is it for the people or is it for the banking system? Well, we know the answer, unfortunately.
Well, finally, I want to say that it seems like you've talked about the command and control of various prices and commodities and bonds and equity markets. It seems like the result we saw, we already know from history what happened in the Soviet Union. There was a glut of certain things and a shortage of other things that people really needed and wanted. And I would say that going into the end of this year, 2014 into 2015, the negative GOFO rates on gold would suggest there's actually supply shortages and people standing in line waiting desperately for their little ounce of gold.
Well, certainly in India, China, in Asia, there is high demand. I don't know if the West is ever going to wake up and realize that tangible money still has some purpose.
The U.S. Mint had record sales of silver ounces. The people know. The people watch Keiser report.
That is a point. But, you know, in terms of the great mass of Americans, you know, in America we live at the center of the imperial financial power, and we don't understand how we're being controlled.
Well, that's a
on
good
that note, well, we got to go. But so hopefully it will all be resolved this year in 2015, one way or another. I don't know if I can take another 12 months of financial repression and the drip, drip, drip of being hoodwinked by central bankers.
No, no, no.
All right, well, thanks for being on the special show.
Oh, thank you, Max. And thank you, Stacey.
Staying on this theme of command and control and disrupting that command and control, Reggie Middleton. All right, happy 2015, Reggie Middleton. Let's get into some prognostication. Stacey.
Well, if you're seeing this, we made it to 2015. So, Reggie, give us a big call for 2015. What do you see as the big theme happening this year? Is it market crash? Is it bond crash? Is it equity crash? Is it housing market crash? Is it what?
Okay, well, 2015 will be the year of the recognition of blockchain technology, number one. The media will get it right and stop talking about currencies and payments and realize that you have the ability, Internet 2.0, basically, where the protocol, TCP/IP, was the biggest thing that hit the world over the last 20 or 30 years. Well, they will realize that the Bitcoin protocol would be the next step. That wasn't realized in 2014. I think a lot of people, banks, regulators, and users will recognize it in 2015.
Yeah, I think you're already starting seeing that where the press is now talking about, oh, I don't like Bitcoin, but I love the blockchain.
Exactly.
So you're starting to, the education process is kicking in after a year or so of getting it, as you point out, wrong.
Right. Okay, number two, if it hasn't happened already, you're going to have the equity market correction. Okay, the equity market correction is going to be followed by real estate market correction, all caused by the same thing. The free money, okay, people, you get drunk, you're going to drink but so much before you throw it back up. And if he hasn't earled yet, the market will earl sometime in 2015. The amount is difficult. You know, unfortunately, my crystal ball batteries died on the way over here. It was a long plane ride. But I see it will happen most likely in 2015.
All right, so you see stocks first, property second. It reminds me of 1987. You had a stock market crash. The real estate in New York didn't crash until 1990. Right. Same thing in the UK. Mm-hmm. Mm-hmm.
And what about, we've had zero interest rate policies for years now, and we allegedly have pulled back on quantitative easing. Are we really doing that? What's going to happen to all those people, all those misallocation of capital that has happened? And it's been one of a historic, I think. The sort of people chasing yield have invested in the most bizarre things. What is there a reckoning there?
There will be when it happens, but you know, I have yet to see. I hear it in the news. I have not seen any pullback of quantitative easing. You know, if the U.S. raises interest rates like they promised to do every other quarter for how many years now? You know, if they do it, then you're going to have that correction is going to be forced upon it because now you're going to have a reconciliation of reality in financial markets. The banks can't afford it. You know, if you take ZIRP out, how much economic activity and true earnings are banks developing, pushing out? You have entities with the stock buybacks. If you borrow money and buy back your stock, right, you're not raising earnings, you're raising earnings per share. You're actually raising economic activity. So as a CEO of a big Fortune 500 company, a non-financial company, I am now becoming an investor. I'm actually buying stock versus running my company. Okay, if IBM, if Apple and anybody else finds that the best use of several $1 billion is to buy stock versus to produce new products or services, well then there's no growth avenues. So they're basically eating themselves from the inside out. You know, when interest rates go up, you can no longer afford to buy stocks. Earnings per share now drop because you can no longer reduce the share base. Earnings never rose in the beginning. You know, revenues stagnated, but they lift earnings through machinations of financial engineering.
Well, this is IBM you mentioned. Remarkably, they've spent $108 billion buying back their shares, their own stock, in the last few years. Only they're not reinvesting in the company. So when interest rates go up, are we just going to see that company just evaporate one day?
Well, you probably see something negative, but it would be mirrored by everybody else who did it as well.
Yeah, I mean, this is
Even
why
Apple did it.
typically crashes are very sharp, sudden, and severe. They say markets climb the staircase and fall down the elevator shaft because of this exact process.
Right.
Because the earnings are manufactured and they start to hollow out the company to create those fake earnings, essentially.
Right.
So there's a very, very little underneath that veneer of profitability. So once the veneer is cracked, then it's a long way down because they've been hollowing it out for years. It wasn't a sudden certain reversal in business prospects. They've just hollowed that company out, hollowed that market out, and then once the reversion comes, it's sudden and severe.
Yeah, and you know, Reggie Middleton has to blame management. Imagine IBM if they spent $108 billion on R&D. Imagine, with just a 10% yield, right? That $10.8 billion in R&D came up with a new blockchain technology, a new web, anything. Instead, they bought their stock, which will probably end up tanking anyway. So, you know, management wants to appease short-termism of the Wall Street, you know, the street, et cetera, versus growing the company. It's your fault, management.
Reggie Middleton, you've been quite good here in the UK, where one often finds one refers to oneself, and a third term, like Her Majesty refers to herself, I believe, as Her Majesty.
I'm going to start calling myself Max Keiser when Max Keiser says this and when Max Keiser says that. Anyway, we got to go. So happy 2015, and we'll catch up with you again soon.
Okay, look forward to coming back.
That's it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Alice Merkel of GoldMoney.com, Mark McCown, a.k.a. the artist taxi driver, who's out this year with a new movie called West Monster, Chris Powell of GATA.org, keeping up the fight against gold manipulation, and last but not least, the Royal Reggie Middleton of BoomBuzzBlog.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all!